Got just around 3.5 minutes to the closing bell. We want to bring in Jim Bianco. He's the president of Bianco Research. We also have Mike Zingbot, the Harvest Volatility Management. Mike and Jim, thanks so much for being here. Jim, let me start with you. Since last time we spoke, this market has just continued to trend higher, hitting intraday record highs earlier today. I guess my question to you is whether or not this is going to continue.
I think over the near term, it's going to continue because the market's got the momentum going and everybody's been chasing it right now. If the question is, will it continue throughout all of 21? I think the answer is going to come down to other issues other than the obvious ones like the vaccine. And the issue I'm really focused on is interest rates. If interest rates were to move up too much in 21, and that's my fear they will, it could put a halt to this rally.
Mike, I don't think the Fed has indicated they want to raise interest rates at least for another year to year and a half. So I'm curious, is the faith of investors just essentially up in a way? There's no stopping this?
In a word, yes. I was just thinking that I cannot remember, I joined Wall Street in the mid 90s, so I've been on the street for a while. And the dot-com bubble is something that's often referenced this year, specifically when you look at stocks like Tesla or Amazon. And I don't see much of an analogy between that period of time and today. There's positivity in the marketplace, but it is less about, in my mind, striking it rich in a week or two, and more about supreme confidence that there's only one ultimate direction for equities in any time horizon that exceeds 6 months. The investor community since late October has circled the wagons around the hypothesis that stocks will go higher, whether that is because of Fed policy or fiscal stimulus or the recovery from the pandemic or some combination of those things or something else, faith in technology, faith in innovation. I can't tell you what weight goes to each component, but there is this calm faith in upside, and it worries me in general, but the contradiction is that investors have been absolutely correct. Any investor that has been worried and then reacted to take risk off the table during those periods of worry made a mistake. The only
we hear it. We
strategy,
hear it, Tana.
Yeah, the long-term strategy that has worked since 2008 has been risk on, risk on, risk on, and for every dip you buy, it's become kind of a joke, but it's been working. I mean, anyone who buys the dips has been vindicated, and today's an all-time high to prove it. So, in a nutshell, up is the
Mike, hold on one second. We just want to wrap
the
the bell. We had the closing bell on Wall Street. Dow, S&P, and Nasdaq all registering gains, although we are closing off the highs of the day. The Dow almost at 30,200, although closing just shy of that. The S&P up just around 0.3%. That's a 10-point gain. And the Nasdaq up 0.5 percentage point. So the Nasdaq, the outperformer of the three major averages today. Nasdaq, S&P, and Russell 2000 closing at a record. Jared Blickray, let me bring you in and just what's on your radar here from today's outperformance that we saw pretty much across the board?
Yeah, another interesting day. Energy leading the way, but it had some help at the top with healthcare and also staples and materials. Industrials also outperforming, so interesting sector mix. But you look at the big mega caps over here on the NASDAQ 100, not striking gains, but they're gains. Apple up 0.5%, Amazon right there with it, Microsoft 0.75%. One of the standouts for me today is Tesla, and here it's up 1%, start of the day 2 or 3% in the red, offering another $5 billion, going to bring its total 2020 offerings for shares up to $12 billion. It'll have $20 billion on its balance sheet in cash. It's just an amazing story here. But also looking at some strength in the travel space, mainly in the cruise lines. Royal Caribbean and Carnival each up over 1%. Norwegian cruise lines, they're up 6%. That brings it to 22% over the last 5 days. It looks like some of the booking stocks, like Booking.com, for instance, down 2%, a little bit under pressure here. But also looking at the semiconductor space, we had a number of record highs again here, and nothing too dramatic, but just kind of inching closer. And you look at the sector participation. I mentioned healthcare before as one of the day's outperformer. Pfizer up another 3%, not a big surprise there. Moderna behaving like who knows, like a pot stock two years ago, like blockchain 3 years ago, and also recently it's up 20% over the last 5 days. So the hot money flows still going into this market. And just want to take a look at the cannabis space overall, because we're seeing a lot of strength here. So overall, a nice sector mix. This is kind of like what we see in December, not a lot of intraday market action, but I think we'd be content if we just got to watch paint dry for a couple weeks here.
Jared, I can think of more exciting things to do. For instance, I want to ask Jim about what he's worried about with interest rates. I'm looking at the yield on the 10-year. I mean, we haven't broken 1%. And even if we did go higher and some of these spreads got kind of precarious, wouldn't the Fed intercede to bring them down?
Depends on why interest rates are going up. For the last 25 years, the reason interest rates have gone up is that real growth in the economy is expanding. If you have interest rates go up because real growth is expanding, the Fed could step in and probably squash those rates down. But if you have interest rates going up because inflation is expanding, and I believe that's going to be the story of 21, the Fed steps in, they'll destroy the bond market. If inflation is driving rates higher, and the Fed tries to stop that, they will make it far worse. So it really comes down to, if we're going to have a vaccine, if we're going to have this reopening, and we're going to have this giant surge of activity that everybody thinks, and we're going to throw another $1 trillion of stimulus onto the pile as well, too, do you think that prices are going to go up? That is, prices of everything, not stocks, but stuff, CPI prices go up and create inflation? If so, bond investors are going to exit. They're going to leave in a big way. And if the Fed thinks the answer is going to be is to artificially hold prices on bonds high, yields low, they're going to leave even faster and create a big mess. So it really is the story of 21 is going to be inflation. I think we get it. But even if we don't get inflation, then we should have $1 trillion stimulus every quarter. Because if you can do that and not have inflation, why would you ever stop?
Mike, how are you positioned into the end of the year and then also looking ahead to 2021?
I'm sorry, was that me?
Yes, Mike.
How are we positioned? We happen to be more conservatively positioned than we have been in the last 5 to 7 years. Our strategy is a little bit different than the usual long-only manager, but risk and our approach towards risk is the broad topic that we can universally discuss. And we see a lack of respect for potential negative outcomes in the marketplace, and we want to reduce our exposure to those outcomes. So we don't see anything in particular, but we see a cavalier attitude out there that makes us a little bit worried. And we're in the risk business, so we have to take risk. We can't be completely out of the market, but we're less exposed than usual.
All right, Mike Zingmont of Harvest Volatility Management and Jim Bianco, president of Bianco Research. Always great to have you. Thanks so much for taking the time to join us.
Thank you.
Thank you.